Hello, I'm Angeline Ong and welcome to this IG Live special covering the Bank of England rate decision in just a few minutes time. As we count down, let's get you across the details. Investors fully pricing in a 12th straight hike, 25 basis points expected. This would take rates to 4.5%, a level not seen since October 2008. Now, if this is the result, then investors will be looking for clues on the likelihood of further rate hikes in the months ahead. Earlier this month, a poll from Reuters showed that most economists expected a pause at 4.5% for the remainder of the year. Most, but not all, were earlier this week. Goldman Sachs said it was now forecasting rates to peak at 5% in August. Now, as recession fears ease, this all gives a bit more elbow room for the bank to continue its fight against inflation, which is still stubbornly stuck above 10%. The bank's target, as you know, is 2%. Joining us now as we count down to that decision is IG Chief Market Analyst Chris Beauchamp. Chris, what's on your radar?
I think it's the 25 basis point interest rate hike is very much the done deal. It's where the Bank of England sees itself going now. I think obviously the Fed is seen as being on pause, and yesterday's CPI reading seems to confirm that, and the ECB also actually seems to have moved in that direction. It's the BOE now, really, the central bank that probably is the least willing to hike rates, but knows it has still a lot to do. It's the questions where that goes from here. In any sense that maybe that will start to put a dent in the pound's rally against the dollar. If we look here, we just yesterday, in the wake of that CPI reading, we saw the pound hit that 1 year plus high against the dollar, which comes as perhaps a surprise given the concerns of the UK economy, but it sort of happened in the background since March. We've had a very big rally. I think it's the question of what can the BOE say now that can support that if you're looking for fresh upside. What will they say that will reinforce the message? Will they say that more hikes are necessary because inflation is too strong? Otherwise, I think the risk for the pound at the moment is still skewed to the downside.
So the mood music really is key here. The IMF has actually said that growth for the UK is going to be probably the weakest amongst the G7. As we know, inflation is stubbornly high as well. Which camp are you on? Do you think that they might hit pause, or do you think you're more likely to concur with the crew at Goldman Sachs that perhaps August is more likely when we'll see a pause?
Yeah, I think we're still too far from a pause at the moment. I think because of the fact that inflation is so high in the UK, we're still in double-digit territory, whereas in the US it's come down sharply. Which for the Fed, it means they need a reason to hike more, but the BOE needs a reason to stop hiking, and it hasn't got that at the moment. It has to just keep going, however unwillingly, because it knows if it doesn't do any more, it will certainly come under pressure from the government and from the media, essentially, and consumers to say, well, you can see prices are still rising at double-digit levels. What are you doing about it? And that is the problem. And equally, of course, that will lead them over to hit the complaints they are hitting mortgages and consumer spending. But really, there is no alternative at the moment, to borrow a phrase.
That's an interesting point as well, Chris, because the Bank of England, as you mentioned, media, consumers, and also in the city as well, has come under fire for being very behind the curve in terms of raising interest rates. Do you think this might be part of the reason why it might continue with its hikes for a bit longer?
Yeah, a lot of central banking, I think, is about appearances and what people think you might do next, really, rather than what you actually do, which is back to Mark Carney's days, really talking about, we need the next move for rates might be up, but it continues to talk about the investors didn't do anything really. The same thing is here. You have to show willing in fighting inflation, not just say you will. And I think that the key, it's just as the Fed has to say, I can't say explicitly now we're on pause, but everyone knows they are. The BOE has to continue to reiterate its commitments to fighting inflation because it knows it's got such an uphill task, really.
Right, any moment now, we're just waiting on that figure to cross the headlines, to cross. The Bank of England, just recapping all this for you, expected to raise rates to the highest levels in almost 15 years. It's widely expected to increase the base rate to 4.25%, from 4.25% rather to 4.5%. Now, if it does so, this will be the 12th successive hike in a row. Now, the Bank bank, as you know, has been hiking rates successively in an attempt to lower inflation, which has been stubbornly high. I think the bank thought that it had eased slightly and those rate hikes had been working, but then it bumped up again in that March to April figure. And we have those numbers now. As expected, the Bank of England hiking rates to 4.5%, a level not seen in around 15 years. Chris, early comments from you?
Very much as expected, but a big upgrade to GDP as well as for CPI. And the comment there is that if evidence of more persistent pressures, then further tightening is needed. So there's the Bank of England sort of laying down the law there on that point, really. But it's nice to see actually that improvement in GDP figures. So that's perhaps the key to bear in mind, and that's why you've got, if you can see this on the chart of the pound against the dollar, there's a 5-minute chart. We are rallying back above 126. So it looks like, though the bar maybe was fairly high for a hawkish and a positive BOE, that's what we got, and that's why the pound you see has recovered in early trading in the wake of this number.
Right, thank you very much there, Chris Beauchamp. Just checking on some of these levels for you. This is cable, as you can see here. Just looking a bit closer at the chart, we're seeing just a slight rise there. As you can see, the level before that Bank of England rate hike, as expected, was around 12,562. Just looking at the FTSE as well to see if there's any reaction there. The FTSE prior to the announcement trading at around 7,747. It's now around 7,735. And also looking at the pound versus the euro there. Prior to the decision, it was around 11,506. It's now 11,532. So just to recap for you, as expected, we had the Bank of England raise interest rates by a quarter point to 4.5%, a level not seen in some 15 years. Do stay tuned, because we are also going to look out for the presser, of course, in just a few minutes' time to find out about the Bank of England's mood music as to where interest rates are heading, and inflation, of course, in the months ahead. Until then, I'm Angeline Ong and Chris Beauchamp as well from IG. Thanks for watching.